Well, let's get more analysis now. And my next guest, Abyd Karmali, well, he's global head of carbon markets at Bank of America, Merrill Lynch, and he's been also looking, of course, not only at this one, but Abyd, you were there 12 years ago at Kyoto. Now, over the last couple of days since I've been here, there's so much concern, frustration that these talks are not advancing. But at Kyoto, it was a last-minute deal. Are we going to get something similar this time around?
Yeah, I think so. Look, in Kyoto, they told us we have to be out of the room by the Friday night, and the reality was it went through till 6 a.m. the next day. My feeling here is that things are even more chaotic. The issues are even bigger, and it's going to be some time before they break through the crunch issues.
Now, a lot of the delegates we've been speaking to are saying, yes, we might get a deal, but actually it probably won't be very satisfying because it won't be legally binding, and it may actually see temperatures rise at around 3%, where the actual target is 2% Celsius. Is this the kind of agreement you're looking at?
I think what's happening over the past couple of weeks demonstrates that there's just too much division on the critical issues. And so in terms of emission reduction commitments, too weak. In terms of level of financing, I think we're okay. The Hillary Clinton announcement yesterday was a pivotal moment that actually unbroke things compared to where they were. And then the other one, in terms of level of transparency, we're beginning to see some concessions from China, which I think is important in further unbreaking things.
Now, depending on what kind of agreement we get here in Copenhagen, what does it mean for your business in terms of carbon trading?
Well, this is the interesting thing. What happens here is largely government to government, but as you know, the carbon market is completely a construct of policy. So what we have to do is try and figure out, what does this do to the flow of capital? Does it give a signal to invest? Does it give a signal to stay in the high carbon intensive industries? And the reality is, the only thing that we know with certainty is that the European Union emission trading program goes until 2020. There's a contingent event, an option that they can exercise. And one of the things we're looking for is, will the EU exercise the option to go from minus 20% to minus 30% if they believe enough is done by others? And that is something we'll only know Saturday morning.
But in terms of the actual growth potential for carbon trading, I mean, we saw such an explosion in terms of demand for this commodity. Is it going to increase, threefold in the next 10, 20 years?
Yeah, I think the reality is, this business, the carbon market business, can go from $125 billion in 2008 to potentially $3 trillion by 2020. To do that, we would need to have, number one, the US, Australia, Japan, Korea, everybody else on board with emissions trading. Number two, we would need to have reform to the clean development mechanism, that's the project offset credits that happen in developing countries, and a scale-up of the ability of the UN system to process those projects. And number three, a forestry carbon mechanism, which is called RED, reduced emissions from deforestation, that actually taps into the market. Now, on that last one, I'm pretty convinced that the negotiators are going to come up with a market-friendly solution, and that's good news for capital, because it's a great opportunity for us to deploy in a new sector.
But what happens if we actually just have an extension of the Kyoto agreement today? Is that going to curb this actual business?
If there's an extension to Kyoto, that is actually a good transition strategy for us to go from currently an expiration period at 2012, which is causing a real problem for the market, to one where we know people can begin to extend their capital.
Abyd, thank you so much. Great to speak today.